I'd like to invite Stefan Müller from DGWA, who's going to be our anchor for this discussion. And of course, I have Michael Waitz of KfW IPEX Bank, Danuta Tuchorska from EIT Raw Materials, and Sandra Primiero from Deutsche Bank. Please welcome our panelists, and we'll get stuck into some of those challenges and issues that Hawk has already painted for us.
Yeah, thank you, Adam, and welcome all of you here in Frankfurt, the first mining conference, first serious institutional mining conference ever. The first lesson, Adam, is start a little bit later next year. People in Germany are a bit more lazy than in London. Yes. We are happy to be partner of One-to-One, and when Adam came and told me that they do that mining conference, I was very happy. I mean, there have been reasons in the past why we did not have such an event in Frankfurt, and there are very good reasons why we have it now. And I think the mining market in Europe, in Germany, the investor market will rise substantially. My firm, DGWA, Frankfurt-based investment banking boutique, we invest in mining deals since more than 20 years, and we in fact focus on the first time of the life cycles of smaller companies, since we cannot compete with the financing possibilities that Deutsche Bank and others have. But we connect investors, the companies, corporates, and since 1 or 2 years also now institutions like KfW, EIT and others, since these government and other organizations became a new source of financing for these companies, which is new, and lots of companies, especially outside Europe, are not aware of that. And therefore, I'm very, very happy that on that panel here is 3 companies that most of you would not directly identify as big players in mining, but these are names in Germany, in Europe, worldwide that are very important, and that we have these 3 companies on the opening panel on the mining conference is just impressive, I have to say. So we have Sandra Primiero. She works for Deutsche Bank. I think I don't have to explain what Deutsche Bank is, but she will just give us an idea what they do in the mining business currently and in the future. We have Danuta Tuchorska, is working for EIT Raw Materials. I guess the experts in the panel will know that body, but it is a relatively new firm sponsored by the European Union, and he will give us an idea as well. And Michael Waitz from KfW, all of us know KfW. They play a very active role in the mining industry since long, not that well recognized, but he will give us an idea as well. And I would say we start with you, Sandra, to give us an idea what Germany's largest bank is doing in the mining industry.
Thank you very much, Stefan, and it's great to be here. And I was just at a commodity conference last week, and I heard from the organizer there they had started in 2016 with 50 participants, and now it's more than 300. And I believe with this conference being the first in mining in Frankfurt, it is maybe a bit smaller for the start, but I'm sure given the importance of the topic, it will grow over time, and it's great to be here and then to also have one-on-one meetings with some of you later. Deutsche Bank has been financing commodities for decades. So the team that I'm heading, Natural Resource Finance, has been doing that for 22 years. Hauke formed part of that team years ago with my predecessor who had built the team. And we finance energy, we finance metals, and we finance agricultural products. While the portfolio is globally currently relatively energy heavy, metals will play and are playing an increasingly important role. We finance already trade of metals, we finance the working capital metals, we finance brownfield mining, and what we are just entering into again is really greenfield mining. And I would lie if I say, okay, we have been doing that for ages. No, you would know us from the market in a different way if we had been doing it for decades. But we have, of course, noticed that this is super important, and we want to do it more, and we are building it, and we should build it together. So we need to have convincing stories from you as miners, and then we as lenders can support you at the same time with our financing products.
Thank you. Danuta, EIT?
EIT is on the market in the last 7 years as a partnership organization, and also founded from the European Union. Our main strategic goals are to increase the innovative environment in Europe, to create proper development on raw materials sector with the support from the European Union, like connecting the industry with education, with research and development, and allow the transfer of knowledge from the science institutes to industry. On the other hand, we are representing European Raw Materials Alliance as a service provider to allow some mining projects, some recycling projects related to critical raw materials to be supported from European Union banks, from the commercial banks, and our access to finance team is working to build the portfolio potential financial support, and not only for junior mines, for new projects.
And KfW.
Yeah, good morning, everybody. My name is Michael Waitz from KfW IPEX Bank. So the mining industry is like a big family, and it seems to be the same case here for the audience today. But I think it's a starting point, and it's good to have the conference here for the first time. Really appreciate that. So who is KfW IPEX Bank? We are a 100% subsidiary of KfW, the biggest promotional bank in Germany, the second biggest bank by balance sheet here in the country. And KfW IPEX Bank, the name stands for International Export and Project Finance. So we are a niche player. We are acting as a commercial bank. And we can also provide funding as a senior debt provider for junior miners, which I think is good news for you. We can do that in a certain window. What does it mean? What's the window about? So we need a European angle in a project. It could be either an export out of Europe based on an ECA-covered basis for a mining company, or it could either be an offtake-based financing for the mine when we have an offtaker here in Europe on certain schemes of governmental authorities as well. So there's a solution on the debt side from our side available in a certain window.
Okay, so let us try to touch some of the major topics in this very interesting times. I think we have two groups of people coming together here mainly. Number one is the investors, and number two is the mining companies. And while the investors, after a decade of rising stock prices and making money everywhere and low interest rates, have the most difficult year since, 20 years. The mining companies, after a very boring decade of some way sideways commodity prices, now have since 1 or 2 years, somehow because of the electrification, but mainly, of course, because of the implementations of the implications of the war, have a relatively good time with rising commodity prices. The question is, how long will that mining cycle last? How far can prices still go? What is the situation with the supply and demand? And I mean, that will be interesting for both, for the investors and for the mining companies. And we want to learn about your point of view in that most important question. So where do we go to in the next 2 or 3 years? And I think we start from left to right, from right to left, with you from Deutsche Bank, Sandra, and then we go through it.
I believe we have two different trends currently that we see. One is the economic downturn, which of course everybody sees has the impact that less material is required. And at the other end, we have the energy transition. Hauke has mentioned it before. Everybody is super much aware that we need a lot of different metals for the energy transition. And that starts with the normal base metals and goes into rare earths. And so it's the whole range, and also new types of metals. So, and I believe while in the short term, 23, 24, maybe prices and demand will be specifically in Europe still be heavily impacted by the economic downturn. Also, we see economic or challenges, at least not downturn, but less growth in China. So it's globally a bit more challenging in the next 1-2 years. But if we really mean it seriously with the energy transition, I'm a firm believer in commodities and in increasing demand to finance, to have the sufficient supply for this energy transition, which is so energy heavy.
Well, I think, Sandra, you colored it pretty well. What I would like to add from my side is that we need to keep an eye on the timeline. Like developing a mine, bringing new volumes to the market needs a certain time, and the time is really visible on that. It might take 5, 6, 7 years to bring a new mine on stream. And we need to keep an eye on that and take a decision now and not tomorrow. Hauke colored it very well with the automotive industry and the change of mindset, which is now going on. But others, like from Korea and the US, are, I would say, 1 or 2 steps ahead of us from the industry perspective. And if I look at the transition and the timeline for 2030, 2035, we really see a huge gap in volumes being available at the market, not only in the new metals we are looking at and rare earths material, but also in classical materials like copper, where we might see a doubling of the volumes needed by 2030 only. So that really worries me a bit, and we need to get that started now.
I fully agree what was said. From my experience from the past, when I was working in the copper industry, usually when you have this slowdown in global economies, this causes some delays in delivering new project on stream and new production on stream. You will see like delayed deficit. You will most probably see also slowing down in commodity prices in next year, but then when you will have the growing economies back, and on the other hand, delayed project on stream, you will see again the spike in the prices. This is like it works. So
I think the major topic on that conference here will be is, are we getting enough product for our industry here in Germany and Europe? Where do we get it from, and how sustainable will we get it? When you spoke to the OEMs, for example, in the past, they told you, well, we buy it at a dealer like Glencore or others, and we don't know where it comes from. And to be honest, we really don't want to know where it comes from, since that was not their job. And now, where every company has to prove the ESG criteria over the whole value chain, they have to go to the source, which is the mine. That all is changing. And we heard a lot from Hauke and also from the gentleman about China and his very powerful role. It doesn't help us when we set up standards that will be defined in mines in 2 years or something like that. And the mine is defining under a standard that works for us, but the product will be sold to China. That's not the thing. I have a very critical point of view about the understanding of the German industry, because we are not alone on top of that. I mean, they flew to Canada and they now think they reinvented the wheel buying junior mining companies, but other countries do that since decades. It's not really fancy. And so I have a really critical view on our industry, if they are really able to handle the situation, if they really understood the situation. Tomorrow we will hear from BGR, Mr. Michael Schmidt, who wrote a study about lithium, and he is thinking that there's a huge gap between supply and demand, which is larger than the current yearly production in 5 years. Very interesting to hear about that. So please be straight and honest where you see the problems in our industry here and what has to happen to solve it, and what is kind of a worst case scenario. Do you really think or see that we may run out of product and we have Chinese cars all over the streets in the future?
Yeah, at least the Chinese offer cheap electric cars, cheaper than the ones that that our German OEMs offer. But so what I see is that we have been quite successful in Europe, in Germany in the last couple of years, and it really takes time. And it took that shock also with that war, and it's a horrible war, but the impact shocked everybody so much that I hope it was really a wake-up call. We are financing our clients globally, and when I speak to our team in Sydney, for example, or to the colleagues in New York, they are a bit surprised really how much leaned back we are still and we are not fast enough. And we heard it before that China is just faster. You said it, in also getting up to speed, financing the miners early, and this is what we really need to transport into, frankly, from a bank perspective, into our committees, to really convince our committees that we also need to finance, but we also need to transport it into the manufacturers and companies in Germany, in Europe. It will need to be a joint effort from all sides. Otherwise, we will lose out, I would fear.
Yes, I think we have to acknowledge that we are looking back on more than 30 years of globalization, right? So the European industry really shifted their basis manufacturing to Eastern Europe and further ahead to Asia and mainly to China. And this is a basis which is part of the organizations and the companies themselves. So it's a big shift they have ahead of them. I think the automotive industry with big volumes of imports of raw material and especially of pre-manufactured parts. They understand the situation, but they have to hire new people. It's new knowledge. They have to onboard in the companies, and it's taking place, but it's taking a lot of time on the other hand. And there, as mentioned, the Korean and US manufacturers are a bit ahead of us. On the other hand, it's a change of mindset as well with the OEMs because they always put their risks on suppliers and sub-suppliers. I think they learned that they need to invest on the whole supply chain. And honestly, what's like a 500 million investment into the mining industry, as an example, for a big OEM? It's just the learning curve they need to take. And of course, they are risk averse as well, same as we do on the banking side. So I think that's the reason why on the OEM side we have a lack of time there. With, let's say, the German Mittelstand, and I think Hauke pointed that out pretty well, the supply chain is not a direct one with a mine or with a supplier. There are a lot of steps in between. That's why we have a lot of hidden champions here in Germany. They're very creative on the R&D side and developing new products, but they are not the best ones on taking care of their supply chain. And they had a reliable partner over decades. I think on that part, we really need to think on the industry side about further cooperation, like putting the heads together, thinking if they might buy things and parts together. And it's also about bringing more processing industry back to Europe, looking at new technologies, creating a new environment for the supply chain here in our home country.
It's a very complex question, I would say. If you look, if you look at the rare earth crisis, I think over 20 years ago, we had already the first discussion that we are going to be dependent only on China, who dominated the market. We are today, and the situation doesn't look different. What doesn't mean we are not efficient. So world is already racing the Formula One race. And as you mentioned, US, China, Korea are ahead of us. Are we able to join this race and win this race? Only if you onboard a really good team. And in my opinion, this team, it's not only current buyers of commodities, it's the whole value chain. These are the regulators. These are the institutions. If you want to have the industry, the mining industry back to Europe, we have to really take care of the social license to operate, because mining, it's not anymore the fancy part of the industry in Europe. If we are looking at the all activities taken by European Union and local governments, yeah, they do have strategies, but not always are able to deliver, because, in my opinion, there are silos. Like the industry is working not entirely with the other potential stakeholder of supply chain security or supply security. We, as a EIT Raw Materials, we see our role to really engage more the partners who joined the European Raw Materials Alliance. But so far, in the last 2 years, it's like the declaration, they are the members of European Alliance, but it's not more than that. So I'm pretty sure what you are referring to, that we have to close to close the gap and really engage each stakeholders in the value chain. We need some institution or someone who lead this process to make sure everyone understands that without working together, we are not able to achieve anything. Automotive industry is changing, but from my experience, they were always out of the market mindset. When they're talking about the commodities, they were really targeting unrealistic terms, not really understanding where the market goes, what market requires from them in terms of the commodities. So then education and understanding how really we should create our strength in order to win the race.
Yes, that's exactly the situation, and thanks for these honest words. And that's the only way to solve that problem. Unfortunately, most of the people we spoke about not here, but are still in Munich and Wolfsburg and other cities. But I think the message is going around step by step. That brings us to the next point that we unfortunately have to touch as well. I mean, even the last year, commodities prices were going substantially up, but that was mainly because of the higher demand of electric vehicles and the understanding of the supply and demand gap. Also, the economies all over the planet were doing very, very well. Industry was doing very, very well, and there was no inflation. Money was cheap. And then out of the blue, this war came and changed everything, unfortunately. It is always a bad time for a war. But in combination with that rising prices, I think we all followed the nickel prices, for example, that were skyrocketing 300%, and then the stock exchange stopped trading nickel. The question is, and I really don't want to discuss your point of view when this war may end and how it will end. I think this we should not do here. But how will this war change the global situation? I think we all know that it will change it dramatically. I think we all know that we won't come back to the contracts we had with Russia and Belarus and other countries. How far will it impact us, and for how long? And is there a realistic chance? To work completely without these markets in the future? You can, if you want to, we do it vice versa now. Yes.
I don't know, really. I think this situation will create totally different dimension in terms of correlation between the countries. My private opinion is that China will be the most beneficiary country out of this conflict. Are we able to be independent from Russia? Very difficult question. First of all, then we'll have to find a substitution for several commodities which are delivered today from Russia. There is no easy answer.
I know, difficult.
Well, on the mid and long term, I'm a bit more optimistic. I would say if I look at iron ore, the market has been reorganized and reshuffled. New sources have been tapped, and that's shifted to other parts of the world for higher prices, obviously. If I look at nickel and cobalt, my feeling is there's a big race around the globe for the sources, looking at other and more sustainable supply chains. Again, it takes a lot of time to get the volumes to the market. This will be and will remain a bottleneck for the next couple of years. And same with other kind of material like rare earths and so on. So I think for the next couple of years, it will be like a continued disturbance of the market. And it needs to be seen if we really solve the question of new supply chains with other countries and sources there.
Yeah, not pretending that I believe it's an easy topic, but I believe that both Ukraine and Russia have substantial commodity reserves that over time we will need to and want to get access to those again and do business with them. Ukraine politically way easier, of course. Eastern Ukraine, of course, with all the destruction that is taking place, very difficult. I heard last week from a Chinese bank that China is quite disappointed about this whole situation as well. And while we believe they might be benefiting, but they had invested heavily into Ukraine as well. And that is all now destroyed. I think there is a global interest to get more access to the market again. And but it will take time as we see sanctions in Iran. How many years do we have them already? Do I believe that we will get rid of those Russian sanctions soon? I think no one can predict. And they will stay certainly for a while. We are also seeing that other markets are opening up, that we speak also with clients in different markets who clearly benefit, also in other countries in Eastern Europe. We see a lot of action also in Africa. And then the question is, how long will it take for them to be on stream and become really substantial suppliers? I believe speaking in terms of 5 years or so, then there will be a reopening, but also new markets will have been established and we will see less dependency from single markets.
Okay, so before the war and the problems that came through that, the word that was the most spoken in the mining industry was ESG, something none of us had ever heard before 5 years ago. And now the market is full of ESG specialists. And it has, of course, it's okay, it's good that it's there, and it has changed the mining industry dramatically. I mean, a mine can never be green. It's impossible that you have a green mine. It does not work. However, we need mines, and that will not change. And we have to invest in mines, and the very high standards of all kinds of investors regarding ESG, I think, has changed a lot in the mining industry already. I mean, Australian banks do not finance Australian mining companies. That is something that is really interesting. It's changing now again because of the mining companies are changing. But the money is going only into products and projects. Our money, the Western money, is going only into products and projects that are somehow fulfilling the ESG standards. The question is, how far can that go? Are we on a global scale somehow already on a level where we can say, okay, the mining industry is where it should be, and we can, with a good feeling, we can invest in I mean, I'm not talking about maybe the Congo or countries like that, but in general, do you see that there's more room for improvement, or has the financial markets industry already pushed the mining companies and the engineering companies so far that the mining industry becomes somehow a green industry now? Maybe you start now.
I'll take that question first. Yeah. Well, as an institution, we always took that topic very, very serious and have a lot of experience on that aspects. I would say from my perspective, we are not on track yet in all of the countries and all of the projects. I think the biggest gap we have to bridge is the picture of the mining industry within the society to really get that moved more towards the ESG picture and the positive aspects of that one. It's still like a dark picture of the industry to a certain extent. And I think that has to be changed with a lot of transparency, with inviting the people to the mines, explaining the concept, and being more open on what we do in that sector. And the mining industry will be key to the transformation. So it's like the starting point. If we don't have the raw material and the access to the mine, we won't get there, by far not. And of course, we still have this not in my backyard mentality, not only in Germany, which also plays a big role in that. That's why I'm saying we need more transparency, more openness towards the society with the mines, explaining what we do, how we do, and where we want to get.
I think, first of all, mining will have to adjust to all the requirements. Who is pushing the transition? It's not only financial institution, it's the needs of customers. It's a lot of awareness in the value chain that the primary mining has to change, but not only them. The key elements I see when talking about, for example, about Africa, it's not only about the direct investment and investor requiring the new mining will develop in the way it will be accepted, very sustainable and according to ESG standards, but also additional support we are seeing, like for example from EU, US and Canada, for example, when they are investing money into infrastructure, into education, in implementing the standards in the authorities in those countries to really support the transition from random, let's say, mining production into international standards. The question is whether all the players on the market are respecting the same rules, whether Chinese investor is doing the same like the others one. So the even playing fields for everyone is only way we can see this transformation happening fast.
ESG are 3 different letters and stand for 3 very important, not independent, related, but 3 important elements. And the E, when we speak about that, we always think about carbon equivalent emissions, sorry. And that is, of course, very relevant. But in the mining sector, I believe water waste management is also a super relevant topic. You see it in some countries in South America, for example, Africa, it's certainly a topic. There is no water to waste, and to reuse water and increase ESG standards with that is not as much discussed in the press yet, but I think is something super relevant and will become more relevant over the next decades. The S part, social standards, you asked, are we there? Generally, I would say not, but there will be more and more pressure. In many countries, we mentioned China with potentially even slavery involved. We see child labor, we see pregnant women labor, and all that needs to be tackled. And it's super important, not from an only environmental perspective, but to also have those social standards high. And then governance. The G, I think that is also very relevant and maybe most relevant also for junior miners, which have small teams only and don't have a big compliance department and a big legal department, but still have to adhere to all the legal requirements and regulatory requirements as well. So that whole governance piece, to invest into that, to have insight into what is the full supply chain, how do I get access to all the data I need, how do my off-takers get access to the data that I give them, and to show that they can be comfortable with what I am, or you are as junior miners producing. I think that's equally relevant. I think it's great that we have kicked off this debate and that it's in everybody's mind, but there is really a long way to go. And the good message is it's not only for junior miners a long way to go, it's for everybody.
Perfect. So we have still 5 minutes. I think we all understood that there's a lot to do. There's a lot of question marks, but also some kind of hope at the end of the tunnel. But the problems on the way there is big. The mining cycle is not over. The investments will increase substantially. It is one of the fastest growing industries. I guess they said 250 billion euros will be invested only in Europe until the year 2030. Volkswagen alone needs 30 billion euros for their battery production. You are smiling, you see the dollars on the Deutsche Bank fees. So this is, and the good thing is that this industry, and I mean in these times, I mean even that the markets have been, came back a little bit, but we all don't know where that all goes to in the next years. But this whole electrification, decarbonisation market with all these goals, European Union 2035 and others, subsidized with billions and billions of euros from governments, from institutions like you and others, stepping in, Deutsche Bank and other banks all over the world, should give investors a better feeling to invest in that sector than maybe in retail. And all of us know, I don't know how many people already drive an electric vehicle, for example, but we have numbers of 20% of all the new cars in Germany are electric vehicles. It would be higher if you could get some. So the problem already begins, and we hear more about that tomorrow. Then that's it. Thank you very much.
Thank you.
Thank you.